Good morning, everyone. Welcome to Admiral Markets. My name is Chris. Thanks for joining us in this live webinar where we're going to take a look at the Forex market, starting with the euro dollar and specifically using Fibonacci and waves. First of all, though, please be aware that this webinar is intended for a global audience and may not be suitable for everyone. To find out more about that, if it is suitable and other conditions and details, visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. There too, you can request a copy of the risk disclaimer, which states that trading for exchange and other financial markets is considered high risk and may not be suitable for everyone. Please therefore seek the advice of an independent financial advisor for more information on that. This webinar is not advice, it is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. Alrighty, folks. So I hope you had a good, relaxing weekend and are fully focused for this session. We're going to take a look at Fibonacci and wave. Fibonacci, very useful for identifying entries and exits, potential bounce and break spots, identifying perhaps even filters, because for instance, you might want to skip a breakout trade if it's right in front of a big fib level. So you can use it in various ways, especially if you use it on higher time frames, I would say. But even on an hourly or 30-minute chart, definitely sometimes has its uses as well. I never use it on really on a 1 or 5 minute chart that much, but waves are useful because they give a bit of an idea about where could be a good spot for placing a fib. So with waves, if you have a good idea, it gives you a good idea about when to use fibs or not. Fibs are great with trends, not so good in ranges. And looking a bit at waves at least, without being maybe overly serious about or overly focused on an exact wave count, could still give us an idea about when or when not to use fibs and on which swing high, swing low. So that's why they're a pretty good match together. So we'll be using these tools to identify the trend, see if there are any opportunities, look at any potential triggers, and if I see any entries and exits in this morning market or maybe later today. So let's take a look. First of all, Dow, a quick look, as we always do, at this calendar. And before I scroll down, I will ask you quickly, good morning, Jen, good morning, Beverly, if my sound is okay. Great. Perfect. So it seems like that the sound is a bit better today. Good. So the interest rate stayed at 2.0. That's not so surprising. The Australian bank already decreased it last time, I think it was. So normally not, Australia doesn't normally, I think only with one exception, decrease it twice in rows on average. I mean, if you look at history at least. We got German unemployment change. We have construction PMI, CPI today. But more importantly, this week is pretty full of news. We have Greece, of course, lingering in the background, and whether they can make a deal with their creditors, and like the IMF and the European partners, which will be, of course, kind of weighing down the euro, perhaps, or having some kind of unknown effect. The deadline where the Greek government needs to start making debt repayments is coming closer. I'm not exactly sure about the date, actually, but it should be not all too far from now. Does anyone know the exact date? So this is something that is kind of like this unknown factor that is kind of annoying, perhaps, depending on how you look at it, but it could have a bit of this Friday, perhaps, could be a bit of a difficult factor. The 5th of June, yeah. Thanks. So that's indeed Friday. So that's, yeah, it's coming closer. It's a around the corner effect. But we also have the euro and pound interest rate and an NFP. So, it's one of those weeks that is a bit wacky because of that. So be cautious with those factors. Alrighty. Euro dollar 5-minute chart seems to be pushing up. Looking at this relative strength index, you see that it's kind of wacky at the moment because the Australian dollar is just totally pushing the whole graph. This is a relative strength index, so all these lines represent a currency. So let's zoom up and see, or zoom out and see if we can take a look at a different view. The euro dollar is pushing up at the moment, so perhaps the bullish bounce is occurring. We'll take a look at that in just a second. This indicator seems to be a bit slow, so perhaps I'll skip that for the moment. I'm not sure. Maybe I just had to re-click it. I don't know. Ah, okay. That's it. So anyhow, Australia at the moment seems to be the most powerful on the 30-minute chart. Dollar decreasing, as you can see here. Let me make that a tad bigger. There we go. Let's see which one. The euro has a bit of an upbeat, dollar down. Looking at the angle, I'm looking specifically at the angle of these lines that represent, once again, the currencies. A specific currency, not like any currency pair. Yen is falling. So we see that Aussie strength, New Zealand flat, but relatively strong because it's above the 0 mark. Yen, the downside angle, but falling also falling. Pound falling. So CAD, pound, yen weakness, apparently, a 30-minute chart. Dollar also losing ground. Aussie, euro, seemingly the strongest. Well, anyhow, that's just to give a rough indication of what's going on. I mean, that doesn't say anything necessarily, but kind of gives us a short track about perhaps some pairs that could be interesting to take a look at. So anyhow, let's take a look, first of all, at the euro dollar. And then we'll take a look at the pound dollar, indeed. Okay? First of all, euro dollar, looking at, for those that are very interested in wave analysis, by the way, you will find on the Admiral Markets website my wave analysis, and that's published around 5 p.m. UK time, 5 a.m. sorry, UK time, 5:30 a.m. UK time, sometimes 4:30 even, on average at least. And you'll find that by going to Analytics Wave Analysis and then just clicking on the most recent one. And this is today's euro dollar, pound dollar, dollar yen. I do it only on those three currencies. And you can see basically, to get an idea of what we're looking at on a 4-hour chart, here you can see that we're probably in a wave B, or at least that's what I have labeled now. And it's completely kind of a zigzag to the downside. Whether that zigzag is indeed completed, not 100% sure, obviously, because price has gone sideways after that. A sideways zone like that could also be just a pause for more downside, and then I would have to change the wave count, and my wave count is invalidated, and the price is doing something different than I expected beforehand. If it breaks the red line, then there's a higher chance indeed that this wave count is correct, and wave B, the C of Y of B is indeed completed, plus price probably will then indeed head up to the C of Y of 4 here. You see that? So that's why these two trend lines are important, whether this wave count is correct or not. If it isn't correct, price stopped at the 61.8 fib, which means that price will then most likely continue to the 78.6 fib. And that's the space between those fibs that price could fall between. So we're using basically trend lines and fibs here and wave count to come up with a general kind of rough plan about how to trade it. When you see something like that, in my opinion, I'm thinking if it breaks this, there's space down to here. Wave count is invalidated, but there is a short intraday short potential. Why intraday? Because the space between these two fibs is not a lot. Well, it's not that bad actually. It's about 150 pips. So maybe even an intra-week trade. But also we have a 107.50 psychological round level to deal with as well, by the way. So, but there is some space below that. That's a breakout, a bearish breakout trade, and I would have to change the wave count into something else. That's okay. If it breaks to the upside, then there's space to eventually this target, but I would still be cautious of 112.50 because it's a psychological round level and because of this top. But there is space then to that 112.50 and then above 112.50 to the target and then to 115 and then to 117. All right. Bob lost sound. Does anyone hear me at the moment? Not sure. Hopefully it's just a glitch. Great. Perfect. So those are spaces basically. That's kind of looking at the profit potential there upon the break, just from a general point of view, using fibs and waves. More upside potential, I think, more spaces, but obviously if we break below the 78.6 fib, also there is some space, logically, right? Down to 105 probably, which is the psychological round number. So regarding wave counts, as you can see, personally, I encourage traders to use impulse and correction, and then perhaps after that, as a second step, start labeling it carefully. I think that just starting off the bat with labeling is maybe not so productive because it's frustrating, perhaps it's difficult. So just getting an idea about impulse and correction at first, I think, is already very handy. What is impulse? What is correction? And using it in live scenario, demo testing it, trying to catch an impulse, trying to catch the end of a correction, maybe trading a correction. But being aware of this structure is good. The next step is to label it with waves, but that's not always a step that everyone likes or appreciates or wants to do, so that's okay as well. If you do want to take it to the next step, then wave analysis would be the way. But then I encourage just to use it roughly. It doesn't make sense to be overly precise with counting waves, I think. As long as you have a loose idea and you establish clear levels and invalidation levels, like this is the invalidation level for this wave count, that should be enough. Debating to the very finest details, I think, is not very productive unless you really love wave analysis and want to make it a hobby. That's something else. Or if you get more experience, then you might do that automatically. This is the 1 hour chart, and you can see I connected these bottoms here and these tops. At the moment, I'm still thinking about a 1-2-1-2, but obviously if we break this, it will be something else. It will be some correction. When you look at these corrective types of formations, they're either WXYs like here, or they can be the starts of new trends, in that case 1-2-1-2s, but then we need a very big impulse. We need a break, a momentum to the upside, pushing it, expanding the wedge, expanding the channel sometimes too, because sometimes you'll see something looking like a bear channel. For instance, you are in a downtrend like this, and you see a channel like that. There could be two things going on, depending on the bigger time frame. Either it's a bear flag for more downside, which is very, very likely in many cases, or it's actually a channel with a wave 1, a wave 2, a new wave 1 and 2, or even a new wave 1 and 2, and then all of a sudden, you get this. And it starts to break the top of that channel. What looks like a bear flag is just actually the base, the start of a bigger channel. And when we break through the top, the channel gets expanded. What happens is that the bottom line is the bottom of the channel. This is the top of the channel, and that previous top is now a midline. It's just the halfway line, basically. So the old top is the midline then, most of the time, right? Or even the quarter line if it really gets expanded to the upside. Does that make sense? I hope. If not, just let me know. So looking at the top and bottom of a channel like that is important, because when it breaks the bottom, it's probably a bear flag. And if it breaks the top, there is a chance it could be this expansion. Now, looking at price action to see which of the two is more likely is handy. Also, to of course avoid kind of false breaks here and here, to the best ability we can. We cannot always avoid it though. So that is the point. So basically, this trend line important to see if we can get that in momentum for the wave 3 of 3. And indeed, yes, indeed, Björn. If this is correct, there should be a lot of momentum to the upside, if the euro-dollar analysis is correct. So let's, with no longer ado, take a look at that euro-dollar now without the wave count. Alrighty, let me... So what I'm looking for here is a break of this trend line, which we are doing now at this moment. So perhaps this is a very early kind of indication that price is making the bounce here off of support, off of this support, and breaking, right? Or let me say it this way: here it's bouncing, and here it's obviously breaking. It's bouncing at the fib level, bounce, pull back, and now it's breaking that resistance trend line. It's an early moment though. Actually, if you would have asked me 2 hours ago, I would have said this is more a buying spot than a selling spot because we're so close to support. Maybe the likelihood of it succeeding to the upside is not as very high, but there is a lot of profit potential, and not so much profit potential to the downside because of the many layers of support. More layers of support than layers of resistance. So the profit potential this morning here was to the upside, I thought. But anyhow, we are now moving up, so we got a break of the candle. The candle to me looks okayish. Because we got a question from BT. That is actually this what I'm talking about now will at least partly answer your question. This is a good bullish candle. First of all, it has no wick on top. It has a decent size, 0.2. It has a close near the high. So the bulls were in control throughout that hour with a decent volatility, nothing as small as this. And therefore the breakout probably decent. Now we have a lot of news events, and when that happens, I personally prefer the 4-hour chart rather. 4-hour chart I think will give us a bit more solid information than the 1 hour to avoid a fade breakout. If you're looking to trade the fade instead, then looking for a 1 hour or 4-hour kind of reversal bearish candle, perhaps a big wick. Let me see if we can find a recent example. I don't know, maybe here, I don't see a perfect example here, but this one perhaps, something like that here could be then the signal for short, but for a fade short. But from a breakout point of view, I'll be looking on the 4-hour chart, to be honest. I'll be looking for price to clearly close above this trend line or break this fractal by 25 pips. So there are two options. Actually, maybe that is even the preferred one. I think I like the pending order at above this fractal. Now the fractal is 109.80. It's a 4-hour fractal, 109.80. So we have 110 right in front of us. So I rather go just a tad above 110, maybe 110.05, with a stop loss below this bottom here at about 108. What is it? 85. Let's say 108.80. So that is about 125 pips, which perhaps is a lot for some of you, but in this case, when trading a 4-hour chart, it is a kind of average stop loss, to be honest. If you don't like the size of the stop loss, for whatever reason, maybe because of the account and the risk that otherwise would be too high, then I would wait for the 4-hour candle to close near the high, wait for a very strong bullish candle, put a fib on that candle, wait for a retracement to the 38.2 or 50 fib, and put the stop loss below the candle, the low of the candle. So something like this. Wherever it closes, wait for the hook back to 109.55, 56, 109.50, with a stop loss below 109.17. So let's say 109.50. If of course you have to put the fib, of course, where the candle stops. At the moment, the candle's here, but if the candle goes higher, then we have to drag the fib to the higher spot logically. But just want to check that. At the moment, it would be this fib. If it stays like this, it would be this fib. In that case, the entry would be 109.52-ish, with a stop loss below 109.17 at, let's say, 109.13. So that would be a 39 pip stop loss and a lot tighter, smaller size. The target, well, that's another story. Let me first finish. Yeah, that's what I think could be 2 entries. So let me first do that, set that up. 1 second. Okay, so one is more like, I would say that the wider stop loss is more definitely an intro week. The tighter one is more could be a bit faster trade. Now, for the fibbing the candle entry technique, trail stopping each and every candle could make sense, or almost each candle. Each bullish candle, certainly, each candle with a decent bullish size. Let's take a look, for instance, let's say you caught a long in here. Then using this candle makes sense, but perhaps not this candle because it's a big wick on top. So we might still want to use that previous low here. Then use, I don't know, maybe even these lows eventually. Not the first one right away, but maybe the second one, because then these 2 wicks could indicate a reversal. So by using the candle lows, in many cases is a good practice, but you might want to approach it from candle to candle and think, do I really want to use this candle? Is it a very small candle? You might not want to use it. Is it a first kind of wick? You might not want to use it. But if it's a second wick, you might want to use it, because then it could be a reversal. So I try to use it. I don't want to necessarily use myself a very rigid candle by candle approach, but want to use each candle, but then still decide if I want to use the candle or not. I hope that makes sense. Anyhow, using most of the candle lows should be okay as a trail stop. Now let's talk about target. If this is a breakout, then it could go far, and I would first target 102.50. Sorry, 112.50. Sorry. Getting these numbers mixed up. 112.50, which is close to 250 pips then. That would be the main target. After that, 115. We talked about that potential for it to break. Now, of course, there's a lot of news events, so this is what I think technically. Will the fundamentals fit, kind of complement this technical picture? That I see, no idea. Really, truly no idea. I guess we'll have to, time will tell. But from that point of view, this fractal break, I think, will indicate we already had an attempt here. The second attempt should see the continuation on average. And we already had a break of this trend line like this, like that. That was the first break. this would be a second break. So it should get a bit more impulse on average. There's really nothing else to say for from this point of view, I think. We had a 61.8 bounce here when fibbing this entire swing high, swing low. We had a good three-wave pullback, so I think there is a chance we can get the bounce at this golden ratio, as it's called. When looking at a higher time frame, by the way, one more last thing. When looking at the weekly chart, basically, I see space up to 117, and why is that? Because if you put a fib on this swing high, swing low, why this one? Because perhaps there is a wave 1, 2, 3, and this is a wave 4. Wave 4 is typically 38.2 fib. So from that point of view, we could still see a bounce up to the 38.2 fib. We can get a turn and then a fall down to parity and perhaps lower. That's what I think is the most likely. I'm expecting, therefore, still a bullish turn until we hit the 38.2 fib. That, I think, when looking at the monthly candles or monthly chart, will probably happen this and next month. That's June and July. After which I would expect, within these 2 months, I would expect the 38.2 fib to get hit. After which I expect August to be bearish and September to then break the bottom of 104.50. Yeah, either August or September. Max October. Let me count quickly. This is June, July, August. Yeah, max October. Probably September. That could be, who knows, what kind of fundamental picture that would require, or what the fundamentals are at the time that would generate something like that. But one could easily, of course, imagine perhaps a rate hike, who knows. That could certainly push it back into a bearish mode, this euro dollar, right? So that could happen. So this from a longer perspective, up, down, like that. And that's the time factor connected to it that I have in mind. After which we could fall to parity and perhaps even to this target. There was something else I wanted to mention, but now I forgot. Doesn't matter. So fib indicator, well, it's basically just the same fib that is just on the standard MT4, but I added the levels, some levels here, like the 78.6, 888, 88.6, 23.6, and the targets. And if you are interested in the targets, perhaps, maybe, or the levels, I can send you those through the email. I'm scared if I send you this indicator, you would just have the basic one. I don't think these levels will be mentioned there. But just send me an email. I'll send. If you can send me an email, then I'll send the levels. Okay. Weekly chart. There was something on my mind. I'm a bit annoyed that I don't remember. But okay, doesn't matter. I'll have to let that go. In any case, last week there was a wick a bit here, so that could indicate the bounce. For instance, here, and if we fib this swing high, swing low, you can see a target, the minus 272 target, nicely lined up with that 38.2 fib, a tad higher. And if we put the fib on the very first part from here to here, it's not cooperating with me. Okay. Then there's you can see it stopped at the minus 618 and there's a minus 1000 target. So there's a confluence at 117. So ultimately 117 could be the target, but that is something that could happen within the next 2 months. So obviously it's not a target I would be aiming for with any trade now, because it would take a bit too long, I think, in my opinion, at least for my type of trading, for price to get there. Alrighty, let's move over to the pound dollar. Hope that this lengthy explanation didn't scare off too many people. Let me reset this. Any questions on the euro dollar by any chance? If it does, last thing, always think about what if, what if, what ifs. Sometimes I need to do that a bit more in this webinar. What if this is I personally think it will be a breakout, looking at the situation, but what if it isn't? What if it is a fade and it starts to fall? Well, in that case, it's always, of course, very important to have a stop loss, because then you can define the risk. Traders who do not define the risk obviously are risking everything, not only their capital, but more. Also mental capital, more than their trading capital, but also kind of like just the ability to continue in trading, because it's a big mental blow to go through that. Always define the risk. So from that point of view, the key level is this 108.80. That's the close for the long, right? But also potential, actually, funny enough, if price does push to this level, it would also indicate the potential breakout for downside, to be honest, right? But I'm not looking at that trade because now price is pushing up. The stop loss would have to be above this top. So is it worth a close in reverse? Typically, I don't do that often, but sometimes it is. Sometimes it's worth closing the long when entering the short right away. And that's okay, because as long as the risk on the long is limited, let's say to, I don't know, whatever makes sense, like 1%, for instance, of the trading capital, then taking the short, again, is only probably, again, either half or 1% risk. So it's not like you're, in that case, over risking, right? So but it is the level to think about potential shorts, or let it break, pull back, and continue. That would be the what if scenario. Anyhow, pound dollar. Pound dollar has been pushing a bit further than I expected. Yesterday, I was looking for a bounce at the 50 fib. So let's put a fib on this entire downside, the entire upside, sorry. And there is one reason why prices only today hit the 50 fib on my chart and not on my wave chart, is because the wave actually took it from this bottom, because it sees this as a correction. And when I'm personally fibbing it from here to here, it's a small detail, but it was enough to have the 50 fib just a tad higher. Now the 50 fib has actually been hit on my chart using this swing high, swing low, as you can see, from the very bottom to the very top. Obviously, we have a bottom here too, and a 150 level and a fib. So I think still we're at a potential bounce spot, but it remains to be seen. Obviously, we're in a pretty good downtrend as well. Now, I also remember what I wanted to tell you. Basically, it suddenly popped in my mind. Basically, when you have a fib on your chart like this, right, you want to always trade it with preferably as possible with the trend. Of course, this is not an uptrend, but in this case, I'll be looking for a bigger correction, which is also okay still to use a fib. And when using fibs like this, any of these fibs can be bouncing spots, right? Basically. But we don't know which one. Which one will be used by the market? Or will they be used at all? Because sometimes we can fib wrong, or we can fib assuming maybe a certain direction, and it just doesn't pan out. The momentum to the other direction is so strong. So this is kind of the game with fibs. It's the cat and mouse that we have to accept with fibs. Any of these fibs could be used, but do we want to use all of them? No, because first of all, these fibs are huge, massive stop losses, so it's not practical. But they could be bouncing spots. So this is kind of like the tricky kind of cat and mouse game that I was talking about. Now, the deeper we go, the less worried we have to be that price will continue to a lower fib, unless it's really the trend is all of a sudden to the opposite direction, of course, right? Then it will keep pushing. The good thing about basically what we're trying to do is look at the 38.2 fib and try to see if that is the bouncing spot on lower time frames, like the 4-hour chart, to see if there's a good candlestick pattern perhaps, and see if it's worth taking a trade there. If all goes well, we can still get out of the break even. Otherwise, it could be a loss there, right? In this case, perhaps there was not even a pause because it just ran right through the 50 fib, right? And here, for instance, there could be an attempt to the 61.8. So my point is basically is that when using a big fib like this, we can try to wait for reactions to these fibs for a long-term or let's say medium-term trade. But there's also basically the potential for price to break through a fib and head to the next fib. So the space between these fibs are also intraday potential to the opposite direction, to the downside. So these are break and bounce spots. Each of these fibs are break and bounce spots, right? Like this. So that's how I see the chart. When I see fibs like that, I see space to the fibs, potential bounce spot. Space when it breaks, space to the next fib, potential bounce spot. Space to the next fib, potential bounce spot. Space to the next fib, potential bounce spot, etc. So it's always this kind of branch that appears at each of these fibs. And this is the game that basically, trying to see which of these trades we can catch. Sometimes it's an intraday breakdown, sometimes it will be a bounce. Hope that makes sense. If not, let me know. So now we're at a 50 fib. This is a break or a bounce spot. If we break, we have space here. If we bounce, we'll have some space to the upside. How much? Well, that's a different, maybe something more for later, but let's say perhaps up to the halfway line here, or to re-challenge this top for the moment. Oh, by the way, Beverly said that the 109.80 has been broken. So yeah, we're getting pretty good momentum here. And definitely pushing and pushing. Looks like a good push so far. It looks like the momentum that perhaps fits within what I was looking for the wave 3, but we'll have to see. At the end of we have to see how the 4-hour candle closes, I think still. But it definitely has the hallmarks indeed. Let's see. Pound dollar. So pound is at a break or bounce spot as well at this 50 fib. Yesterday basically, or actually last week, stopped at 38.2 fib. Stopped at the 38.2 fib, broke below it, hooked back to it, then used it as resistance and fell down to the 50. In this case, we also have a very nice channel like this. Oh. Alrighty. So will this channel continue? If yes, then we'll probably see a fall down to the 61.8 fib. And down to challenge 150 at this bottom. So that could be an intraday short. If we do break the channel, then we can have an impulsive rally, like maybe perhaps the euro dollar is having now. But the pound dollar is not as good set up, is not as well set up as the euro dollar, because it still has, the euro dollar has just broken its top. The pound dollar has not as yet. And 153, in my opinion, is a key level. If I would take the same trade setup as the euro dollar, the entry would be 153.10ish with the stop loss at 151.65, and I would trail stop the fractals or the candle lows partly, with a target of perhaps 155 or even 157. This is that channel, and so far the pound dollar is not making a lot of upside. What I would be looking for downside is probably a good 4-hour or 1-hour candle below this support line, and that could be the signal for downside, for one more downside. Difficult to imagine with all the divergence perhaps, and a big 50 fib plus support nearby, but it could happen, and we could still see one more fall, or this breakout to the upside. The other scenario would be to wait for a break, fib the break, put a fib from here to here when it does break 153. Look for a 38 or 50 fib here and take, I think, the long there at the discount. That would be the alternative. Alrighty, so that's the. Jed, do you have any specific follow-up question on that? Let's see, you wrote that the 1-hour chart channel broke to the downside, and so downtrend is over. I do not understand this. You wrote today on Amber Markets for cable. Okay, yeah, let's take a look at the. Forgot to look at that actually. Let's take a look. Let's see. The pound dollar keeps pushing lower and lower and remains solidly rooted in a downtrend, although divergence is present. I don't see where I wrote that the downtrend is over. I don't think so. I don't think I wrote that, but here, price could make one more false part wave, but a break of the downtrend channel indicates that the downtrend has been completed. Yes, once the downtrend channel breaks, then it would be completed. Maybe I didn't formulate that sufficiently. So it hasn't broken yet, but if it breaks, then we can consider that downtrend channel completed. Sorry for that. I should write would break. If price would break it, then makes sense, right? But at the moment, it hasn't broken yet. So basically, still thinking that this is an ABC, but the downside is just extending and extending a bit further than anticipated at first. And here you can see that downside. So I left it like this because certainly looking at the correctiveness like this, it certainly could fall one more time. And therefore it is possible. So for the moment, I'm bearish on the pound dollar, except if it breaks this downtrend channel. Otherwise, there's a chance to go down to these targets with a small trade to that. You see a confluence here. You see these blue fibs here? Those are a confluence of two pretty strong levels. That would be the next bounce spot. So basically, various bounce spots, break, but maybe on the next one it will bounce. That could happen with this pound dollar. So those are the bear and bull lines that I have in mind, at least. And then I'll take a look at the question of Madras, and then we can take a look at a new pair. Does anyone have a specific pair in mind? Regarding the pound dollar, yes. 153.10 or but then a wide stop loss is needed, or just wait for price to break, place a fib from the bottom to the top, wait for the hook back to the 50, for instance, take a long, in my opinion, a long at the 50 fib is good then, with a stop loss below the bottom, or even below the candlestick pattern, and then target this for a minimum of a zigzag, if not an extended wave 3. Most of the time, there's a good chance of a zigzag, but sometimes it gets extended. If you think there's a chance of extension, I sometimes then leave the TP open and basically just keep an eye on how far it pushes, and then add the TP later on. Let's see, Verity or probability of bouncing from daily fib for the euro dollar or from this pound dollar. 50 fib, I think. Tip on, I mean, not looking at the specific scenario perhaps, but just on average. Let me think for a second. I don't remember the stats anymore that well. Probably about 60%, I would say, and maybe a 40%. Once it reached the 50 fib, 60% chance of bounce, and maybe 40% of a continuation down to the 61.8. But I really don't remember. I have seen stats about how many times price bounces at fibs, but those stats are from a source that I highly trust, although it's also difficult for me to imagine how those stats were ever compiled, to be honest, because it's so variable where you put the fib and how do you even start counting that. And I don't know exactly how that was calculated. So that is, but I trust the source. I don't know how the information is gathered. That's all. But that was something like 60-40. From my own experience, I would say that probably resembles a decent division, I would say. What do you think, just out of curiosity? Does anyone agree with that? In this particular case with the pound dollar, I don't know, 50-50. The current reaction is so slow. The euro dollar is definitely gaining a bit more traction than the pound. The pound could be later. It could start a bit. Sometimes it happens. You see one pushing for a while. You see, for instance, let's say the euro dollar now pushing, and then the euro dollar stops pushing, and the pound starts to push in that same direction. It can happen that one starts most of the time, and then the other follows. It's certainly something that happens regularly. But yesterday we also had divergence between the euro dollar and pound dollar. The pound was falling and the euro didn't break the bottom. So it doesn't always have to be like that. But the pound is certainly slower at the moment and not really making a lot of a bounce. I mean, you look at the 4-hour price action, it is not making any of that bounce. It's very small candles, nothing at all to be proud of as a bull. And yeah, it's looking a bit more bearish, and a break of that trend line could mean a pretty decent potential for downside. Really, I need to see price prove itself by pushing at least through the master candle, as Nanette calls it, which in my opinion the master candle is this one at the moment, with the high here at 152.75, or even the fractal at 153. Yeah, the news event Jen is mentioning as well, definitely. It's the news event. That's why price could be quiet now. And if the news event is positive, it could start making a pretty fast rally. Absolutely. and you can see then the candles becoming bigger. This is currently the fourth candle, which means we're kind of in a twilight zone phase, I think, which could see both the up and downside break. It's 50-50, because if it would be the fifth, sixth, seventh candle already, I would be more inclined to say it's a bullish bounce potential. But this is still the fourth, and therefore we have not had 5 to 6 candles not breaking these bottoms. So to be honest, it's still all downside momentum. This is one momentum still. If we finally have 5 to 6 candles not breaking this bottom, I would give more odds to the bullish bounce than now. And definitely dependent on the news event, which way I think it gets pushed, up or down. So let's see. Yes, indeed. So, okay. That news event is about, I think, less than an hour from now. So we'll have to see. Time will tell. In this case, if we got today maybe not breaking the bottom, another 2 candles, that too would be, but not breaking this level, that too would still be an extra clue that we are going to get this. So time factor and these 3 lines, or 4 lines, and the fib are very important. All right. Kind of exhausted these 2 pairs a bit more than usual, but let's quickly take now a look finally at the dollar yen. What would be considered a good number for construction? I honestly do not know. I could try to give you a forecast, but I haven't looked into those any numbers or such. I'm not a big fundamental trader. I keep an eye on the long-term fundamentals, but news events I don't really follow often. Not this one. I don't know. Dollar yen, but maybe someone else in this webinar knows. Does anyone know a bit more about the numbers? I can tell Jen if anyone else is aware. The question is, what would be considered the good news for construction? 54.2 or 55.1. More than that would be good, Beverly says, or at least better than those. Dollar yen in this channel to the upside, but reaching 125 resistance. So let's take a look. We see basically bullish wave counts. You see those numbers 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. We're in a bullish trend. So from that point of view, I was looking for a hook back to the 38.2 fib or 50 prior to the break yesterday, but it didn't happen. I was looking for a long from those levels, but that didn't happen. Alrighty, let's take a look. Yesterday was bullish. Last week's candle was bullish. This week's candle already broke the high. So the question, will we get a deep retracement like that, or will price just use this bottom for a bounce? And I think that the latter, using this bottom for a bounce, is the most likely. I think a bouncing spot could be anywhere between, here, these two lines. Retracement of this candle could be already enough, but it could challenge the bottom a bit more seriously as well. Anywhere in between this zone, it could be a bouncing spot. Stop loss, I think, in my opinion, I would put any stop loss below, certainly not above 123.85, or 80, which is the bottom here. We're at the 50 fib. So back to the daily. Yeah, I would expect that to today. Let's see. Yeah, the thing is the 125 resistance. That could cause price to today to not continue with the upside and maybe even end up slightly bearish. So from that point of view, I personally would rather wait for tomorrow. I'm definitely bullish, but I don't think today will be a good day for this trade. Especially now with your dollar breaking to the upside. We could see maybe tomorrow a slight retracement still. And when we then get closer to 124 tomorrow, it could be a bouncing spot. So I'd rather wait for the dollar with the dollar yen at the moment. Let's see if there's anything else. Does anyone else have a preference? All right, we'll take a look at those in a second. Indeed, I'm now looking at the pound odd, and I thought this was interesting because of the rising wedge that we have here. And that break of the rising wedge is an interesting setup right at resistance spot as well, and at the 2 psychological level. I think this is one that I wouldn't be surprised could easily retrace a bit deeper. Doesn't make sense to trade it now because it's fallen already so much. But I think if I put a fib on here like this, that a bear flag or either a correction to these fibs down to the minus 618, I think is a pretty good probability. Something like that. Or I should actually do something like this. So I think the pullback continuation is a decent likelihood here. All right, this momentum is going to stop, and there is going to be some correction here. And it depends if we're going to get a bear flag or perhaps maybe more likely a zigzag like this. In that case, if we do get a zigzag, if we get a bear flag, a break at the bottom is a good trade down to the minus 618 target. If we get a zigzag, something like this, then placing a fib on this first correction and trading the minus 61.8 target and shorting at the minus 61.8 target, I think is a good trade because not only do we have a target but also a fib retracement, confluence. It's a zigzag completing at the target, so those are typically interesting spots for shorts or turnarounds in general. So this is something I would be interested in keeping an eye on the pound odd. All right, let's take a look at the euro yen. Euro yen could be pushing up today because of the euro, if the euro follows through at least. But the dollar yen is having some struggle. So I think I like the euro dollar a bit more than the euro yen. But when we looked at the relative strength and weakness, we did see yen weakness. Just don't see any particular trade at this moment, any configuration that I really like at the moment. 4-hour chart is smashing right into this top at 137. No, not for upside. I mean, perhaps a fade out to the downside, but with the euro strength potentially in play, that could be a bit difficult. If the euro fails to push up, maybe the euro yen could be a good reversal fade to the downside. Again, if this does show kind of a big exhaustion or something like that, more of a counter intuitive setup, perhaps. The upside is having some struggle with, or not struggle, but it's running into a big resistance. That resistance can break, especially if the euro does pull through with the upside today. But I wouldn't know at this moment how to trade it. I would need to see a break of that 137 and a pullback. Let's see, daily, weekly oversold. Let's take a look. Well, the ASA oscillator doesn't really show that. Perhaps. Oh, oversold, sorry. There was divergence between these bottoms, indeed. But we already had a significant rally after that. The weekly chart does have green bars. So from a daily and weekly point of view, we are in an uptrend, in my opinion. It's just that we're right at resistance. So I don't mind longs. It's a bullish environment. It's just I would like to see a break of 137 and then a hook back. So I need more information. For my opinion, I need to wait. Let's take a look at the odd USD. Is there any particular indicator you're using, Sunny? Maybe RSI when looking at the oversold? Odd USD made a funny kind of break, bearish move, and then an upside. Stochastics, okay. Yeah, I can imagine there was oversold at those bottoms, but we had significant rallies, but those momentums can certainly continue, indeed. Obviously, I was anticipating an upside bounce. We kind of had a fake out here with the news, but then closing reverse back up. It looks like now we broke the top on the 4-hour chart here, and we are breaking through this resistance line as well. So it looks like we're breaking this channel and this 4-hour fractal. So to me, it looks bullish. It looks like a long, and I would put a fib on this very first swing high, swing low, and expect a zigzag, just like the pound odd, or perhaps even a bigger push. So from that point of view, any of these fibs could be good spots, and I think a short, just a classical short, classical stop loss below the bottom makes sense, unless a candlestick pattern is used at any of these fibs. Then a tighter one could be used. If a 38.2 fib bounce happens, which could happen because of this, then the stop loss is a bit on the larger side, but still 70 pips, so it's still perhaps okay. Classical target would be this minus 61.8, but it could extend all the way to the minus 161.8. So to me, it's looking like this. We had a expanding wedge, which we talked about for months already. In fact, doing something like this, getting the bounce all the way here to the top, making a dip, and then again to the top, then had a very strong fall. But now we are back at support, not the expanding wedge, but the bottom here after a significant fall. So I would expect at least a bit of a relief, a dead cat bounce to maybe halfway, for instance, if we put a fib from here to here. to halfway, for instance, or the 38.2 fib, before we might pump into resistance then at that point. So to me, this looks like the beginning of a turnaround, but I'd rather wait for the hook back here. With the down, I'm not, for the very long term, I'm not too sure. I think it's probably the same as the euro dollar. We're looking at probably 1 or 2 months up, I think, in my humble opinion. If the downside does continue, ultimately we need to break this bottom. Put it very crudely, the 75. Otherwise, I would expect more of a kind of a zigzag rally. Ultimately, even something like this, up to the minus 272 at 83.30. This bounce could only go up to halfway. Let me show it like this, for instance. Then go down, and we might find new support again. I think that ultimately this is probably the path of least resistance. Something like that. So what I would be trading now is this part, this first part here, like that. But then ultimately we could see another turn here for another rally. Now I might be horribly wrong with that, and then a trend line like this could also help. And if it is wrong, it will break through the trend line, and that break there would be signaling further downside. Or if it breaks up, it could signal something like that. Even if it breaks the trend line though, 75 is still important. 75 would mean I think the longer downtrend continuation. For the moment, this formation, I think, as I said with the euro dollar already, could see there is that decent chance at least that we see the some kind of bigger correction to the upside on the euro and Aussie before we might continue with the downtrend eventually. Yeah, 50 fib is definitely important. Yeah, good level always to look at. Especially, I would say, even more important maybe on lower time frames. But I mean, if you have a good, or maybe better said, nothing to do with time frames, but maybe with momentum. When there's a strong momentum, then 38.2 or 50 are the most likely. All right, let's take a look at DAX. Hang on, I need to open that. Almost there. Just give me a second. It looks like I have the wrong one. I'll open the other one. In the meantime, though, let me show you the webinars we have lined up this week. Of course, yesterday was FX recap with Nenad, and today we had the Fibonacci wave. But then tomorrow we have strategy webinar. In the evening, Nenad has his webinar as well again. Hang on, I need to scroll a bit lower. Does anyone have a particular pair still in mind, by the way? Oh. Oh, there we are, finally. Heikin-Ashi, price action, breakouts, and counter trend. And Thursday evening, we're going to take a look at pros and cons of momentum indicators. So that's the lineup of this week. And now let me take a look at DAX. Strange, I had it somewhere here. Let me quickly open it. Alrighty. One, two, four, six, seventh week. So that impulse to the upside on the DAX is over and out at the moment. And we're in a correction. 2, 3, fourth week, not breaking the bottom. So to me, it looks like a chance of a zigzag to the downside. 88.6 fib here. Should target the minus 272 at 109.12. And eventually perhaps even lower at this minus 61.8 target, in fact. The 10,400. So from that point of view, obviously we still have a bottom here in play, but we had a very strong weekly bearish candle. So to me, it looks more bearish. And this trend line, perhaps break of that, could see follow through. Perhaps even a break, a pullback and go. That could be maybe even better. This could still be a bouncing spot, and we could still stay in this triangle formation, and then this could be a good resistance spot. The environment looks bearish to me, but where to trade it, I guess, is something that still needs to be well analyzed. I think that any retrace, this is a big daily candle, any retracement of that candle a bit higher would probably be an interesting zone for shorts. And if it does break, then probably just let this candle break and look for the hook back. Beverly is saying it's near the EMA 100, so was thinking it might use that as resistance, but have been unconvinced as it is so bearish. Yeah, to me, it looks, from a time factor point of view, it looks like it's going to make a zigzag to me. Now, mind you that I do not look at indices hardly, I don't know, maybe once in 6 months or something like that. So it's not something I trade regularly. So, but with the method I use to analyze, this is what I would say on the DAX. Looks like we're breaking this support line as well. Now, I don't want to say that after this zigzag, it could be a very good bounce area again, and then we'll have to see in this zone after that what it will do, because this is already getting into pretty far from now. That depends on too many factors. It depends on how this falls, then it depends on how this rises, and how then this goes down again. If it does something like that, it could be an impulse bull flag and follow through like that, Or if it does something more like this, and then weekly corrects, then probably more downside is likely. It depends on too many factors, but definitely this could be still a bouncing spot, and then the zigzag is completed, right? Maybe the zigzag fails, but for the moment the zigzag looks pretty decent likelihood, and then a bounce. Alrighty, so I think let's take a quick look at pound dollar. Yep, it's already a break just before the news, or 30 minutes before the news already, indeed. With the news event around the corner, the 4-hour chart, yet again, I think could be better. Your dollar pushed, but has a big wick here. So I don't know. It could. I don't think this with the news events. It's just a reaction to that news event, grabbing some profit. I don't think this is a telltale sign, considering the news events, for a reversal necessarily. It probably would depend on the news events indeed. It had already an 80 pip rally or so right at the open. So if it moves up that much with a news event around the corner, then it's logical that profit is taken, and that it's logical to see this reaction to a certain extent, especially if it moves up 70 pips that early. So I think that the euro dollar is still open to both sides. But primarily upside still. Pound dollar could be a bit different because, as I said already beforehand, the pound is more bearish. It's in a downtrend channel, and it has a master candle still here with clear resistance that's not challenged. So that's definitely bigger, a bigger chance of downside. And the euro looks more bullish. Now with the 4-hour candle still open, I still have to wait and see. But if it stops something like this, a retracement halfway to candle and downside would be good. Now, Jen was talking about cable using the Camarilla. Let's take a quick look at Camarilla. Let's see. Cable using Camarilla has H3 at 152.35. The H3 is actually a resistance spot, so a long should only be taken if it breaks above it. Personally, I'd rather have a fractal hitting the H3 and then breaking above that fractal. In this case, this fractal, for instance, although it's not right at it, it missed it by a few pips, as you can see. Preferably the fractal is right or within a few pips of the H3 and then a break above it. In this case, until that happens, this is still more of a resistance level. So that is how you can use it. For shorts, we need a break below L3, basically, and this bottom. So preferably have a fractal here or just below it, and then wait for the next break. Alrighty, last question from Mudras. Yes, the euro dollar I do. I think it's a good long. It is something, maybe the only thing that could be different is that this is a top still here, which is kind of annoying that the entry is right at that top. but I'm primarily looking at this fractal. That fractal is important in my opinion, but a safer, even safer one could be perhaps this one, and then maybe not 110.05, but 110.14 could still be an option as well. Otherwise, I don't see. I mean, this could always turn into a loss, but I wouldn't have any objections. I mean, no problems with it because, in my opinion, because it's. I don't see any reason why it would not have a decent probability here. And a decent profit potential as well, right? Both are important. So this seems to have both. But doesn't mean that the trade is indeed infallible necessarily, of course. But typically, 4-hour fractals are already pretty strong levels. When you get breaks of those, you, on average, already have a decent trade. So if we consider the total environment, if we add that to it, then I think there's a slight advantage. But even without the context, fractal breaks are typically on a 4-hour chart already pretty valuable in most cases, but not all cases. Obviously, this fractal break here, not so valuable. This one, not so valuable. But I like to go about 20 pips beyond it so that you don't get like small breaks like this. Well, I'm not sure if this was a small break, actually. This went more than 20 pips. Okay, let me see this way. Typically, 20 or 25 pip away from fractals already saves some of these false breaks. Not in these two cases, but in many other cases, yes. These two cases were, ironically enough, just 25 pips. So those were not good breaks, obviously, but many other breaks are good, like here to the upside, here to the downside, here to the downside. Okay-ish break even to the upside, a win to the upside, a win to the downside. So that's already typically a pretty good expectation. And if we then add, do some analysis and try to filter out the bad ones and understand which ones could be the good ones, then I think that this one has a decent chance. Risk to reward, a 2-to-1 at the moment, how I have it. If I aim for 152.50, that is, but my TP is still open. And I leave it open on purpose, by the way, because of the fact that I want to see how much momentum is there to be found. If the momentum doesn't go too far, hits the minus 618 and starts to move down like this, and then up and starts to make something like that, then I would aim only for 112.40. But if it makes a dash and right away already pretty fast to 112.40, 112.50, then I will move the TP up to 115. Or I would place TP around that level. Or I could even fib it again from here to here and look for the minus 272 target. So I want to see how far it initially pushes. If it pushes very far, I will try to aim for a higher TP. If it doesn't push too far, I'll aim for 112.40. That way I can get the best of, hope to get the best of two worlds basically. If it doesn't move too far, I still get a pretty good profit. But if it pushes far, I don't cut my winners too short. So I want to see how this reacts here, or yeah, if it does that first of all, obviously, even if this is a 50-50 setup, I think that the profit potential compensates, that percentage. I think it's slightly more. I would call it more a 55-45 or even a 60-40 probability. Plus, we have the reward to risk on our side. So that's why I think it's in the long run this should make money. So that's about it, I guess. Yeah. So thanks for joining. We'll be back tomorrow with strategy. Thanks for all the comments and questions. Appreciate that as always a lot. And wish you good at trading and happy hunting. And see you soon. Cheers.